It's no secret at this point that SCHD has become incredibly popular, especially among dividend investors and investing YouTubers. There's even an entire Twitter account dedicated to SCHD called SCHD Stan. But I think at this point it's starting to become a little bit more controversial, mainly due to the fact that it's been underperforming the S&P 500 by a pretty big margin since about March of 2023. By comparing these charts, you'd essentially have a higher return by investing 100% in ETFs like SPY or VOO than if you were to have 100% in SCHD. And I don't know about you, but I continue to see tons of posts and YouTube videos about how and why SCHD is still the one and only ETF that you need to build significant wealth and become a millionaire. So why is SCHD still considered to a lot of people one of the greatest ETFs on the market today? Why is everyone seemingly still so obsessed with it? Well, in my opinion, there's a lot of really good reasons as to why. Number one is that it's great for income-focused investors who enjoy getting those dividends every quarter and also want exposure to capital gains as well. And this is also why SCHD is often referred to as a dividend growth ETF. It currently has a dividend yield of 3.46%, and year over year, it tends to hover around that 3 to 4% range. Its dividend payments have also been increasing every year for over 10 years now, with its highest dividend payout being 82 cents per share back in June 2024. And in addition to its dividend yield, it tends to grow around 6 to 8%, giving it a compound annual growth rate since 2014 of 11.4%. Now, another reason why investors might choose SCHD is because it provides a lot of diversification, which in turn mitigates a lot of risk. It holds over 100 dividend-paying stocks in its portfolio, and none of these holdings exceed more than about 5% weighting. And most, if not all of these companies in the portfolio have an extremely long track record of paying consistent dividends, and are also just very well-established, wide-moat companies. It's also very low cost of an ETF with an expense ratio of 0.06%, so you're essentially paying just a few dollars a year to own shares of the fund. But all these factors don't negate the fact that it's still underperforming the S&P 500, and that you'd be better off by owning SPY or VOO. Now, with that being said, I definitely don't want to sound like this guy on Twitter who's constantly bashing SCHD. He recently tweeted,
"Seeing a lot of people celebrating SCHD reaching a new all-time high. Who's going to tell them that they're late to the party and still underperforming the market?"
So I'm definitely not saying that SCHD is an ETF to completely ignore and not invest in at all. But I think it's an ETF that's a lot more effective when it's paired with a growth ETF like SCHG or VOOG. For example, if you were to have a 70-30 split between VOOG and SCHD in an ETF portfolio, you'd have a compound annual growth rate of 1% higher than that of the S&P 500 over a 10-year period. There's also virtually no overlap between VOOG and SCHD. It's only 3%, which provides even more diversification while still beating out the S&P 500 year over year. And as always, we know that past performance doesn't equal future results, and there's even been times when SCHD alone has beat out SPY. For example, there was a period of time about 18 months ago when SCHD was up nearly 8%, while the S&P 500 was down 3.3%. So every once in a while, SCHD actually comes out on top. But for me personally, and as someone who has a fairly long investing timeline, my goal is to maximize my returns as much as possible while keeping the risk at a tolerable level. So investing 100% or 90% of my portfolio in SCHD wouldn't really align with my own investing goals, since my risk tolerance, as of right now, tends to be a little bit higher. But that's the beauty of investing, is that everyone's on their own investing journey and has the freedom to invest in whatever they like. So as SCHD continues to become more popular, as well as more controversial, I want to hear what you guys think of this ETF, and if you agree with a lot of the investors that say it's the only ETF that you need. And thank you guys for all of the support you've given to this channel, and I'll see you next time.